Alright, moving on to XLF. I think I might have actually done a Fibonacci retracement for this. Yeah, I did. Mainly because I do remember, if you take it from the high to the low that we've seen over the past 5 years, again, going back, before I even get there, going back to that volume thing, we're seeing volume that we haven't seen in a year and 2 months. So this is very, very important for XLF to hold this ascending trend line. But again, go back to the Fibonacci retracement. Taking it from the high and the low within the last 5 years, we have this nice lateral trend line that sets us apart here at the 23.6% level, which is at 1350, which sits right there at that channel that we were watching for so long, 1350 and 1575, before it broke out to get at least a 17. Now we're seeing a hold of the 200, kind of sitting on the 100, and using the 100 as a pivot, but mainly sitting at the 200-day simple moving average. And I'm really looking and hoping that the 200-day simple moving average holds, because if it doesn't, we're going to see 1350 again. Again, if the accumulation and the buyers really step in hard and heavy tomorrow and start bidding the hell out of this market, I really think that we're going to see a push out of the financials and the sectors that really, really can move the markets. Your financials, your energies, even though it's really looking ugly, your basic materials, and another thing that showed up on my chart tonight, on my screeners tonight, that I was actually shocked. There were so many services sector tickers, and I was really, really, really shocked to see that many service sector tickers. I haven't seen that many service sector tickers in such a long time. So it's going to be very, very interesting to see whether or not the XLF holds the 200-day simple moving average as well as this ascending trend line that it has. We are going to be range bound for quite some time as the move is digested. Don't just think that we're going to be bid up during tomorrow's session, or we're just going to go bang zoom to the moon. It's a nice thought, but I really don't. Honestly, I don't think we're going to see it. Moving on to XLV here. XLV, again, taking the high to the low. We saw a huge breakdown last week of all of the major simple moving averages, as well as the pivot point for that lateral trend line at like 28 or at 30, really, that we were watching for quite some time. Broke down below that, so the next level they're going to be looking at is 28. We have no simple moving average support, only resistance. And the main thing, again, that we're going to be looking at is that 28 support level, and that 30 support level that we were watching, that lateral trend line, has now turned to a resistance. So that's very important to watch as well. Moving to XLI, I love this chart. It really encapsulates what this market is all about, and inflection points at big volume areas. You have an inflection point here after this decline, bang, heavy volume distribution, the market pops. We're not sure of it yet because it's a low volume distribution move. The minute we break over that trend line, we see a reversal here, and bingo, we have that really large push up until we start to level out and get toppy. Now we're seeing the same thing. We see a huge influx of volume distribution. We're sitting on the 100-day simple moving average. We have the 200-day to back us up. We have an ascending trend line support, and we also have that 28.57 level at the 50 retracement, Fibonacci retracement. Not really a big one because it's sitting right below this trend line here at 29.75-ish, and it's kind of sitting. I mean, it's really not prevalent, but again, just as a halfway mark from the high to the low over the past 5 years, it's slightly important. So the main thing that we're going to be watching here is whether or not the volume distribution that we saw last week is going to be an inflection point, and if we do get bid up, whether or not the industrials are going to get bid up hard. And you never know. Maybe you're going to see that out of the industrial goods sector and the services sector, that they're going to be really pushing it if this market gets bid up. That would be extremely interesting to see. XLB, very much like XLE, just sort of died after the 200-day simple moving average was broken. I did announce that last week on Wednesday, kind of Thursday morning, and I did kind of review that this weekend in my weekend post of the Davian letter. But right now we're looking at 30 as a support level. And if we, do see a push in volume accumulation and then a tapering off, of volume accumulation as we saw in this last run, I think it would be very interesting to see that because we may just be channel trading between 30 and 36. Gives us a lot of opportunity to make money, but does the market really go anywhere? It did in the last run, but the basic materials did not really push higher and allow the market to really make a difference. I was waiting for the market to do. Oh man, that's an ugly chart. I didn't chart that yet. We were waiting for the market to do something at 1200 and really push either the S&P to the 1300 level, but we never saw it because there wasn't enough strength out of the main sectors that really make a difference: technology, basic materials, energy, and the financials. We never saw a breakout, and therefore the market declined. On top of all the fear that dealt with the ECB and whether or not they were going to bail out Greece, put that on top of Goldman Sachs, put that on top of the BP news and the oil leakage, you have yourself a whole bunch of fear in the markets, and finally someone just said, I'm out of here, and just pieced and just dropped the whole shebang. House of cards for 45 minutes, whatever the hell you want to call it, and we continued to trade on. Now we're seeing a big bid. What's the market going to do? Is this all the correction that we're going to get? We have a ton of questions that surround this move, and tomorrow, again, I can't stress it enough, tomorrow is so important. XLK, again, we didn't see that big push. I wanted to push over 24. That was the lateral trend line. It was going to get us to 25, 50, 26. It never happened. We see huge volume distribution, huge sell side coming in. The bears just ate up technology last week. The NASDAQ got killed. It was off 8%. Now we're sitting on the 200-day simple moving average for the most part. We really are literally sitting on it. I mean, it's right at 21.75. And below that, we have 21. Above that, we have a little bit of a head and shoulders here with the head being at 23.25. I'm sorry, the head being at 24, the shoulders being at 23.25, and the neckline being at 21.75. So we do see a continued decline in technology. 21 is going to be that support level, and you see it right out of the Fibonacci retracement here. So we can use that the Fibonacci retracement as a crutch here for the 50% and the 61.8% retracement levels. But again, be careful with the possible head and shoulders if we do see a bid up in technology. Moving on to more specific industries. Coal. I did mention this and was discussing this with RTW2 or RWD2. He's the new natty gas writer for the Davian Letter Research tab. He's a solid guy, knows his stuff. So if you, again, snag that subscription, get that free trial. I'm putting this out for free tonight, but all these aren't going to be free all the time. So snag a free trial at Davian Letter Research tab. We put out some phenomenal stuff. But anyway, continuing on here with market vectors coal. We did see a breakdown of the 200-day simple moving average. We have the potential to move to the $30 price support. But again, we haven't seen volume like this in months. I mean, it's been since February since we saw this huge volume, this much volume, both distribution and accumulation here for coal and market vectors coal ETF. So we are range trading. We have a $10 range here in between this channel, but a lot of it is downside right now. We had a lot of upside support until the 50 broke down, the 100-day simple moving average broke down, and the 200-day simple moving average broke down, all pretty much throughout last week and a little bit into the week prior to last week. But for the most part, I am looking for coal to make a little bit of a rebound at $30. Regional banking, $25 and $30. It is a range trade. I am loving it. We need to hold that 100-day simple moving average, and if we don't, we could be seeing a touch upon that ascending trend line. But again, I'm waiting for these regional banks to set up because, boy, when they set up and this market begins to get bid up again, these things are going to explode. These are the setups that I'm waiting for. They really, really are. And we saw it when the market bottomed in March of 2009. Everybody bid on these little names, and they made a bank on it. That's what we're waiting for again, and we're going to make bank on it. Enjoy your week. Good luck. And remember, tomorrow is crucial. Pay attention to tomorrow. Pay attention to volume. Good night.